Hello, I'm Sian Barton, editor of Insurance Age, and I'm here with a panel of experts to discuss the Digital Distribution Challenge. So I'd like to introduce the panel. Firstly, we have Lawrence King, who is Practice Director for General Insurance at Charles Taylor InsurTech. Next, we have Stephen Card, he's Chief Executive of Jigsaw Insurance Services. And we have got Nathan Shanahy, Chief Operating Officer at Aon UK, and also Guy Wilson, who's Finance Director at Mag London. Thank you for joining us, everyone. So I'd like to kick off with the first question about what the current problems are what the current problems are in the insurance sector that might be solved by digital distribution and other digital solutions. I don't know if you want to kick off, Lawrence.
Sure. I'd say that the major problem in the insurance industry with regard to the lack of digitisation is the amount of manual process that we do. Insurance traditionally outside of the personal line sector, in the commercial space certainly, is still a very manual process with a lot of paper, albeit it might be PDFs, but non-digitised forms being pushed back and forwards.
And Stephen, what do you think?
Yeah, I think one of the issues we have at the moment is that we have a lot of our clients capture data themselves, far more than we actually utilise ourselves, because the channels through which that data can come to us don't exist or are very much in their infancy. And I think there will be substantial improvements in that, which perhaps we can discuss.
Nathan, obviously you work for a big multinational broker. What are the issues that your organisation faces, and how do you see it filtering down?
Well, the biggest issue is making sure that we spend the right amount of time with clients. So just getting that balance between spending time with clients and having to undertake the administration, which at the moment takes an unacceptable amount of time versus the time we can spend with clients.
Guy, is that a problem you encounter as well?
Yeah, we find we spend a lot of time sort of manually processing data and re-entering it, and it takes us away what we're actually paid to do and our core focus and our core skills really, and we're kind of wasting our effort put in capturing stuff we already know and repeating this time and time again.
So what do you think the benefits would be of everyone in the insurance market really getting behind digital transformation and putting investment behind it? What would you see as the real boons for doing that?
I think, from my part, the buzzword in the market, and we seem to be reading it in every publication and every webinar and podcast that we listen to at the moment, is acquisition costs, acquisition costs, acquisition costs. The London market, and I think international markets aren't dissimilar. London talks about 42 pence in the pound to acquire a piece of business, which is an unsustainable model. And I think this is a byproduct of our process, again going back to the manual piece. So I think to Nathan's point about the amount of time we spend with clients actually doing our job, which is to be an insurance expert and an advisor to them, as opposed to being an administrator, is disproportionate. And this, I think, is the biggest opportunity from a digital perspective to make that market change and improve the process.
Nathan, is that something you would agree with?
Yeah, I do. I think it's how we go about it, which is the critical point. I think to echo Stephen's point there, where the client has an awful lot of data, it's our ability to consume it and reuse it and then use it in the value chain, of insurance, I think is absolutely key. So the days of us having to constantly rekey, need to be numbered for us to be an effective market on behalf of our clients.
Would you say that rekeying issue is universal across the entire insurance sector, brokers, wholesalers, MGAs, insurers?
Definitely. I mean, we found that our clients are capturing a huge amount of data digitally in the first place and then send it across to us, and we then dumb it down because the systems that we have to interact with as a market can't accept it on that basis. Now, there are steps being taken, there's no question. I mean, PPL has been a great advance, not the greatest advance, but a great advance from a very low base. I think that the DA SATS initiative from the London market, throughout the London market, Tom, is again a very useful step forward. But all we're doing through these things is actually taking something which has already been digitalised, dumbed down, and then making it digital again. Now that seems to me a really dumb way of doing business, and we must be able to do better in this age. I think that's our greatest challenge. As a new business, We don't have the package that the rest of the market carries, so we have embraced going digital from the beginning. So it's enabling us really to keep our costs down, I think, to Lawrence's point, which is absolutely valid, to spend more time with your clients, your point, Nathan, and to have more time to actually develop new products and new services with our clients. That's the important thing for us.
Guy, what do you think the industry benefits would be?
Well, we also don't waste our own time, but we sort of let our clients down by the service we provide afterwards. So they can be waiting a substantial time to understand what's going on at the initial phase, to make sure all the documents in place and they're happy with where they are. But also if through the life cycle of their policy or their risk, if they have a claim, and how we manage that, and the speed that we can provide a response to that. So we may do a very good initial bit of work in placing the risk and doing it for them, and then we don't look very competent later when we're slow to deliver what we've already agreed and pass that information back to them.
Okay, that all makes sense. Now, I'm just going to speak to the audience quickly, just to let everyone know we are doing a series of polls throughout the webinar, so please do send your votes in, and you can also send some questions directly into us that the panel can discuss too, and we'll be discussing some of the poll results as well. I'll move us back to the discussion, thank you. One of my questions was, how do you think digital tools can assist insurers and brokers and those in the market with their customer relationships? Do you think they're very important for driving those forward in the millennial age and things like that?
Absolutely. I think going back to Stephen's point about receiving, or the customer filling in a digital form, submitting digitally, if you take some of the bigger risks that come into the London market, we get a substantial amount of data, a huge amount to consume, which is obviously the function of the broker to refine that offering. But from a peer group analysis, from appropriately feeding back to clients trends, limits, sub-limits, coverages, alternative ways of purchasing insurance, the architecture of the placement, a lot of that data is not being analysed because we take a huge amount of data in, but only normally enter a very small percentage of that into the existing core system. So your ability to then mine is based on how much you can put into your core, not how much you actually receive. So going down a more digital route, especially in the gather phase of the insurance process and starting the digital process, the digital end-to-end process at the very beginning, really switches the lights on in terms of reporting, and that reporting then enables you to have a much more grown-up conversation with your client, to analyse your business fully, to analyse your portfolio fully, and then drive business change and decisions based on that data.
So is that something you would agree with on the retail broker side?
Yeah, I mean, there's multiple layers to digitisation. So, right the way from the back in terms of servicing, right the way through to the front in terms of pricing. I mean, at its most simplistic, our clients are awake in many instances when we're asleep. Mm-hmm. So we have a 24/7 marketplace. We seed risks from all over the world. So when it comes to servicing some areas of the activities, the client expect to get a response almost instantaneously. If you want a copy of a policy, if you want, endorsements managed, etc., and trying to do that when, they send the email when they're awake, we're asleep, we wake up, we respond very quickly, and 3 days later a problem is solved. Actually, enabling some of these processes to be digitally enabled just means that they can get instant answers to some of the things that were historically, a 2 or 3 day process just because of geography or follow the sun models.
Is that something you would agree with, Stephen?
Yeah, very much so. I think the speed of transmission through the digital channels is so much greater, and it enables us to provide the performance that our clients expect of us today. And I always call it, it's that Sunday night, Monday morning mismatch we have. Sunday night you can be sitting at home quite happily doing your personal banking online, shifting money about the place. You come into work the next morning and you're back one stage away from a green screen. And our clients have a similar interface with us. And a lot of our clients have really fantastic business models, completely digital, virtually paperless, dealing with their individual clients at the sharp end. Yet when they come to us, we slow that whole process down. And that's where that digitalisation should be from end to end. And I think that's one of the things, the challenges that we have to accept and defeat, if you like, in this day and age.
Now, we've had our first poll question come in, and the question was, has your firm identified a digital strategy for 2019? So 73% said yes, which means, I think, fairly whopping 27% haven't. What do you think about, what sort of indictment is that on the market, do you think, Guy?
I think we've always been quite slow to get on board with this compared to other industries. I think because of our core business is a very personal business about what we do, we're not necessarily experts in this area, so we sort of are sometimes a bit afraid of it, so we keep it to the back a little bit of our minds, because we think we're okay at the moment, we'll be okay going forward, but things are changing so rapidly. If we don't, it is going to be a problem.
Is it a case that people want to see other people do it first?
I think there's different reasons. So I think for smaller businesses, smaller sort of broker businesses, you have very little capital costs really. So to suddenly, you're renting your building, you are paying your staff costs, a very consistent cost. To suddenly invest a substantial amount of money in IT infrastructure is quite a step, even if it's proportionally going to have a massive benefit to your business. So for someone to make that decision when they don't normally spend that much initially for other products is quite a risk to take in their view.
What do you think, Nathan?
I mean, look, we have a business that data is at the core of what we do. So when I assess the investments that are necessary across our business, we take into account the technology, the people, and the requirements around making sure that we can satisfy the sort of risk requirements and the consulting requirements of our clients. So I think you have to look at them together to form up a strategy and a way forward. And I do think digital means different things to different people. So a lot of the time digital, people are talking about trading versus servicing versus, gathering data. So I think what happens is very few firms have managed to bring them all together. And I think that is what ultimately ends up with a digital strategy. Whereas I do think most firms, certainly of any scale, are moving on at least one of those pillars at this point in time. And I certainly am seeing an ongoing shift in the market, even in areas where it's been difficult to move in the past, whether it be through things such as PPL, right the way through to, the kind of movement around Accord standards, etc. You're really starting to see, steps in the right direction, even though we may not be moving as a full strategy, in all businesses.
So would you encourage all businesses of all sizes, even if they can't encompass all of those digital elements into their strategy, to at least perhaps look at one and see how they can improve their business via digital channels in some way?
I think there's a fear. I think there's a fear out there of technology in some areas. The issue with technology is a lot of people see it comes with a 6 or 7 figure price tag. And it doesn't have to. I think today we have so many people out there who are inventing new applications that we can apply sensibly to our business. And it's very much easier these days to stitch together some of the smaller technology packages to achieve something far greater. And I think people should be less afraid in future to do that sort of thing, because it happens, it's there now, and we can adopt it.
I think from the sort of tech firm perspective of going and talking to COOs, CIOs, CEOs, a bit of the fear factor that comes in is, I've got a big legacy system, I've invested a 7-figure sum in it over a 15-year period, it's working across multiple areas of my business. And whilst there is a consistent request for, I've got to do something digitally, I know I've got to do something digitally, the board are looking at me to make a change in my business, to drive efficiency, to reduce acquisition costs. I think, to your point, Stephen, that they don't necessarily understand across the piece that there is a modular solution. You can put veneers in place that don't have to disrupt your core and your large investment. And I think that's a very valid point. I think LM Tom has been good with Tide, with Boardrow, trying to unify that. That's a modular, standalone solution. And there are other things available in the market, and I know we'll get on to product in a minute.
Yeah, Lawrence, I was actually, I was going to ask you for a bit more detail on the sort of tools and initiatives that are out there digitally that can help the market. What would you say are the most important ones for organisations to be looking at?
Yeah, from my perspective, I'm very interested in starting at the beginning of the digital journey in the gather phase. But Nathan makes a really valid point, and people have different requirements at different stages of their business. It could be the claims function, it could be the process function, the gather function, the quote bind function. From a tools perspective, as I say, mentioning LM Tom and the DA-SAT's Tide project that's gone on now, so there will be standardisation now across Bordro, across all London market Lloyd's cover holders. The next thing is going on with PPL, and then market reform contract unification and standardisation digitally. But again, these are all addressing the issues of insurance in reverse. Whilst it is not a bad thing to address those, as I say, we're very much more focused at the front end. Why can't we fill in a digital proposal form like we do for household insurance for if we're a shop owner or a factory or an airline? Why can't we, if there's a facility available via a broker or an MGA or carrier that is plugging rates into that, automatically return a price straight to the client? You know, why can't we enrich that data as it's coming in with connections to Dun & Bradstreet or various other services out there that can reduce the burden on the customer and give them a better user experience? These things are available in our marketplace now, and I think that the step change that's required in the industry is to just get out of the way, because the technology exists to do some of this heavy lifting. It's just up to us to open our minds to it and let it in.
Now, we've actually had a question come in from the audience. I'm not sure who's going to want to take this one, so I'll put it to you. I guess it fits into that tools package, the new technologies that are available for use. So it's from Jeanette Phone at Sutton Winson, and she has said, would you consider blockchain technology to store data, lower the costs of administration and ensure that data cannot be manipulated with? So how much faith have you got in that blockchain proposition? Who wants to go first?
I mean, look, it's a technology that's by design needs to bring a whole market together before it works. So I think is it a technology that could genuinely work? From a technology perspective, the answer is yes. I mean, one of the things that we have to conquer before we drive technology as the solution is the process. So what we need is process and broad agreement before ultimately you can start to, you know, engage on technology such as blockchain, because product has to be available, capacity has to support it, you know, all of those pieces need to be in place on scale before you'd be even able to consider it. I think the other thing that's important as well is that what we work hard on is making sure that we bespoke for our client. So actually we're not just delivering product, but we understand their needs, understand their sector, understand, you know, what it is that we need to do for them, and therefore not just moving towards selling product, but actually making sure that the product is fit for purpose. And I think if you look at technologies, particularly like blockchain, it works by having a single set of scale that actually connects to a single product. And I think that's very difficult in certain marketplaces, but would work very well in others.
Now, we've actually had another question come in, and it's around regulation and how technology can help the sector navigate that more smoothly. Guy, do you think it's a help or a hindrance?
Absolutely. I think ever increasing regulation coming in, you know, all our sanction checks are now automated. I think when you're looking at not just the regulatory side of things, but certainly when you're looking at fraud prevention on claims, looking for trends and stuff like that, I think technology has a massive saving that more than pays for itself if you can integrate these solutions. And it's probably one of the easiest wins you can have. We are becoming more and more burdened all the time with what we have to do and how we have to report, and the expectations of what the companies have to do to monitor things. The burden is ever increasing on us, and this is a very easy way to allow us to do that with very little effort.
Stephen, what do you think?
I completely agree. One of the things that we found, again, being a startup, it was so much easier for us without any legacy. The one thing I was quite keen on that we should begin with is to have a system that would recognise the whole risk package that we see. And risk is very often seen as the perils which we're insuring against. To my view, that's a very narrow focus. We need to look at the whole environment in which our clients operate and to manage that environment. Now, with us, we're very much focused on dealing with cover holders down the line and their clients, and understanding how conduct risk affects them, how they're managing that, how they're managing their holistic risk rather than just the specific nature of risk by class. And so technologies enable us to do that in a much simpler system, which has probably saved 2 or 3 person headcount at the beginning. And for a startup operation, that's a significant problem.
And Lawrence, what are your thoughts on tech and regulation?
Yeah, I think to Guy's point, you know, we have API connections to sanctions checking, money laundering checking. You can automate that process, whether it's at point of bind or at point of quotation, depending on where you want to do it. So again, it comes back and sort of feeds into the digital journey of gathering. If the insured is entering their name of their business in a digital form that's recognised by your system, that's just a straightforward, very easy connection to make to automate that process and return the false negatives for people to then examine. But the actual process shouldn't be done manually. I think if we did a poll across the industry of how many people do have people sitting there going manually into systems, and it'll be a very high percentage, I would imagine. And I think that's not only for that element of compliance and money laundering checking, but also for the reporting element of it as well. Can you automate that if you gather digitally? Yes. So again, these are all just mindset changes that businesses need to just understand the art of the possible, and then slowly, in a modular approach, open the doors to it.
Now, we've had a question through from the audience about how visionary you think the sector is in adopting digital transformation. Obviously, we had the poll where 30% pretty much are not doing it. Should they be more visionary? And it sort of feeds into the next question about, is the market really doing enough to adopt new technologies such as AI, blockchain that we've already mentioned, what's going on with the driverless car market, for example? Nathan, what are your thoughts on that?
Well, the answer is, I mean, look, even if we listen to ourselves, so to speak, there's still this belief even that we need to key in. I mean, when, you know, the world's best voice recognition software is out there now, and most of the time, you know, I kind of speak to Alexa and I speak to many other things to kind of get me through the day. So, you know, the reality is the market is moving extremely quickly. I believe that you know, we need to be moving at the pace of that change curve or not far behind it. I think naturally as a market, we are always going to be slightly risk averse because we manage risk for a living. So we adopt technology probably slightly later than many other markets. But the continuation of us managing, you know, in faster cycles, I think is going to be critical, you know, over the next sort of 5, 7, 10 years to continue to stay relevant and actually, to Stephen's point, to match the expectations of the client, you know, as they become more and more and more tech enabled at home. Actually, people's natural demands change underlyingly, even though they may not actually realise it themselves. So I think it's going to be absolutely necessary for us to continue to move forward, to continue to stay relevant.
Lawrence, how do you feel about that?
Yeah, I think it's got massive connotation in terms of machine learning, artificial intelligence. We were having a conversation recently about the Internet of Things and connecting to it and what that would mean for the industry. And I think it's got both a proactive and a reactive element to it. So if we look at a portfolio of risk in, for example, a predicted hailstorm cone, can you automate and send clients in that cone a message to put your car away in the garage or put your aircraft in the hangar to stop it getting damaged and having a claim? After there's a claim, can you automate the process to say, we understand you've had a flood, take these measures to mitigate risk, and what are the knock-on effects for our industry? You know, obviously profit is key, and with the acquisition costs we have, everything's getting squeezed. So, say, from a technology perspective, it's out there for us to embrace and use. And whether it's from the front end of driving efficiency and reducing cost at that end, or the back end of mitigating risk or reducing risk post-loss, technology exists to assist with that throughout the chain. So again, it's all about mindset and our ability to embrace it.
Great stuff. Now we've had another question from the audience. It's from one of our smaller, more traditional brokers, and they're asking at a very basic level, where do you think they should start when it comes to developing a digital strategy? What's the first thing to look at?
So I would say take what you have and make sure it's integrated. So start with what you've already got. a lot of the time there's lots of different things doing different solutions for you, and you're repeating what you're doing to put the data into each of those areas. So see if there's a way of integrating those, and that will save you a lot of time and effort at a relatively low cost anyway. It completely depends on what you're trying to achieve on your company as a whole, I think, because everyone has different issues and problems. So it's very hard to be specific on a generic question like that.
So I wanted also to go back to our own questions. Can you think of any really good examples of where technology is being used and it's really adding value to everyone who's using it in the insurance sector?
Big question. I think from a marketplace perspective, and it slightly goes back to the blockchain point, and Nathan was sort of qualifying. We haven't got that many solutions from a London market perspective that are pan-market. PPL is something we've embraced. But the challenge is with a marketplace run by its participants is that you agree everything on a more committee type basis. And blockchain's a classic example. You know, there are lots of different ways of distributed ledger, but blockchain requiring everybody in the chain to be signed up and trusted and all aligned before you can move forward with it makes it a very difficult thing to achieve on a holistic basis. In terms of what exists at the moment that we utilise pan-market, I'm struggling slightly. From a data perspective?
Yeah, I mean, look, I think Lawrence, the data is critical. I mean, a huge reason behind why you want to capture structured information is to make better decisions, make more informed decisions, help your clients to make more informed decisions, understand the portfolio. And, you know, we have utilized the significant amount of data that we've captured to, you know, create bespoke products, to create bespoke solutions on scale. You know, because you know, in collaboration with the carriers, have the insights to work out, you know, how you can develop, you know, leading edge solutions to get to the right answer. So I think there is a huge push for, you know, more data gathering across the market. I think the real critical question is around, you know, how you're able to do that. And, you know, there are a multitude of ways that's potentially capable of being done, but you can look at gathering data at the start, you know, as you said, Lawrence, you know, but also through the life cycle, should you think it makes sense to do so, you can start to use technology such as RPA or integration to kind of start to gather more and more information as you go through that life cycle and avoid rekeying and duplication, you know, through the process. So I think there's multiple ways to come at it to get yourself some early savings for reinvestment, but it does need to align to what your overall strategy is and what it is you're trying to achieve as an organisation.
Stephen, this might be one for you, it might not be. I wanted to ask about how technology can be used best to really develop better relationships between insurers or MGAs and brokers. What are the applications for it with regard to that?
Huge, absolutely huge. I think it goes to everything that we've been discussing here today. It's actually speeding up the transmission of data from the end user client to the risk carrier at the end, and we all form part of that chain of that insurance chain. The efficient use of data in speeding that up has got to be our priority. There's absolutely no question about it. I mean, all of the initiatives we've been talking about today, either at London market level or individual level, are to achieve that. And we're going to end up with a lot happier clients who are going to be asking fewer questions of us, saying, so I've given you all this data, what have you done with it? Well, you come up with this policy that doesn't address this issue. I've already told you about it. It's data that we've captured and haven't used properly. And I think the more data we capture, the more visibility we have of that data, the ability to manipulate that data has enabled us to come up with new and innovative products and developing the existing products we have for our clients' benefit. And that's what we're talking about, because happy clients means happy insurers, happy MGAs and happy brokers. And that's what we want, is world happiness.
I think there's an additional point with that, which is the distribution piece. I think from an MGA carrier perspective, who have got digital product that they can push to the broker, who can then maybe portal it, white label it, push it down the chain to their producer internationally, who can then maybe push it down another step, depending if it's reinsurance or direct business. So suddenly, from going from a manual process of being introduced to somebody, sharing PDF or documentation for them to then go and gather from their clients, to be able to digitally distribute product via the internet, via your website or white labeling to others. Again, it puts your speed to market up, your distribution channels up. It just widens your audience just from flipping from the manual to digital. So I think that's another benefit. And from being an ex-broker myself, certainly having ease of access to product when I'm in front of my client can, give him alternatives, give him alternative coverages, limits, options, because we've got progressive thinking carriers, is certainly a relationship builder.
It can make all the difference. Now, we've had another poll come in, so I'm just going to present this one to you guys and see what you think of it. Now, the question is, just bear with me, what is the main problem you're trying to solve? So for 16.7%, they said increasing revenue. 24% said increasing distribution. 8% said speed to market. 48% said business efficiency, and I think that's quite reflective of what we've been saying now. And 4% said visibility of data. What really stands out to you about that? I think the question around data visibility is quite important in the current climate as well. Guy, what were your thoughts?
Well, I think, cost saving is the most obvious benefit bit there, and it's the biggest one that we can see on cost savings. And I think it's also how we treat our customers and making sure that they are happy with us. We don't want to be asking them, we ask them so many times questions we've already asked them and ask them to get that data back. And in this day and age, nobody wants to answer a question twice. If you put in your password somewhere, you don't want to be putting it in again later and later. So I think keeping our customers happy is quite an important factor on that as well.
Nathan, what were you thinking about that?
I think growth and efficiency are probably inextricably linked on the results there. I mean, you need your most talented people in front of your clients to grow. You need to free up your most talented people from all the things that they're not best placed to be doing to enable you to be efficient and drive outcomes to the bottom line. So I think those two are heavily linked, and from our perspective, we see this as a real opportunity to grow. We think it gives significantly more access to product, to market, and actually frees up our most talented people to spend their time with clients, understanding their risks, and by design, trying to produce outcomes for them that will be good for them and hopefully, good for the marketplace.
Now, Stephen, we've had another question from the audience, and I know you mentioned you're a fairly new company and have been using as many tech solutions available to you as you can. And someone has contacted us to say, do you think the current technology vendors in the UK market understand some of the challenges around digital distribution?
Very good question. I think there are some who do really get it. I think that there are others who are struggling with the concept, but those who do really do, and those who don't are very bad at it. We have been fortunate, as a startup, it's much easier to look at everything, to have a beauty parade and to go through everything and not dismiss anything that may appear to be not at first glance of value. We nearly tripped ourselves up actually and missed one absolute slam dunk because we thought, oh no, we can't apply that to our business. By golly, we could, and it has created such efficiency for us. And it not only creates efficiency, but it's the speed to market that our clients are seeing now as a result of this particular piece of technology. It's been fantastic. So those that do really stand out, they are the pearls. But there is an awful lot of very staid thinking, I think, about big systems, having all the answers, where, frankly, I don't believe they do these days. And we should be casting our net far wider.
One question we also wanted to address is, obviously there's lots of positives to using all these new technologies that are available. Lawrence, do you think there are any pitfalls that the market needs to be aware of?
With new technology? Again, I think it's a very individualistic approach. It's modular. It doesn't have to be this big bang solution to solve everything. And I think with the poll you had earlier about what are the key drivers and what are people trying to solve, certain people have got different things they want to solve. It might be a data and analytics piece, it might be an efficiency piece, a distribution piece, a speed to market piece, but you don't have to come at this in a singular approach. You can cut it up and eat one piece at a time. I think going back to Guy's point about who's doing what, the key element for it though, I think when you're looking at the business and asking, with my digital strategy, what things am I trying to achieve? Can you afford to have people being paid a lot of money in a very expensive postcode sat there doing administration? And we were talking before the webinar about looking at other industries. Will we expect a very qualified doctor in a lab to be spending 60% of his time doing an administrative role? No, he's paid to be somebody solving a very specific problem. But we have people in our industry that have exactly the same function. They're highly specialised, but spend a very large proportion of their time administrating and rekeying data. So there's a number of elements to look at it, but I think the important thing to remember is you don't have to come at it in one go. You can break it down, and to Stephen's point, just look at various elements and address them as they come.
So it leaves people more time to do the thing that they're really skilled at.
Precisely, yeah.
Okay, so I just wanted to ask as well, what in the insurance world, whatever that means to you, because I know you've all got slightly different perspectives, what does a really good, rounded digital insurance offering look like? Nathan, do you want to start with that one?
Yeah, so if I just circle back to the previous question first. So I think what it does is it potentially changes your risk profile. So I think, like any decisions you make organisationally, if you drive particularly for efficiency, if you centralise, you end up with a different risk profile. If you outsource, you end up with a different risk profile. If you offshore, you end up with a different risk profile. If you digitise, you end up with a different risk profile. What you've got to do is make sure that your business is adapted to deliver against that risk profile. And so in terms of an overall digital strategy, you have to have all of the components and be trying to build something sustainable. I think the key thing in a digital strategy is you must never ever forget your client. So it is extremely important to make sure that what you're doing is you're building something to enable them to be more successful, enable them to engage with you more, enable them to get better outcomes. So it isn't, one solution fits all. It needs to be fit for purpose and actually needs to be thoughtful around what it is they need and actually how you're enabling them to be successful. So I believe that having a digital strategy that's broad and can deal with all of those elements, even though you may be using consistently the same technology to actually execute against them, but to make a strategy successful, I think it hasn't just got to be about tech. It's actually got to be about enabling your business to be more successful, and then it's done through tech, would be my view.
Stephen, what are your thoughts?
Sort of three things. First of all, the technology's got to be applicable. It's no good taking something that might give you half the answer. It's got to give you the complete answer. Secondly, it's got to have availability. It's no good buying something and thinking, well, it's great, where do I stick it? It won't work with my main system. It doesn't integrate well. So it has to fit within your overall, tech space, if you like. And finally, affordable. It's got to be something which is affordable, because it's very easy to overreach and say, yes, we want the gold-plated solution, where in fact, by downgrading slightly, you get sort of 90% efficiency for probably 50% of the cost. So those three things, the three A's.
Lawrence, what do you think?
Just picking up from your point about the cost. Again, I think the perception of cost of change, digital change, when we come to people and have discussions with them about what they're trying to achieve and what the outcome is, I think coming at it from reverse, what is your outcome you're looking to achieve? And again, there's various elements to the way you look at this strategy, but running time and motion studies and looking at what you can change and what the effect of that is from a financial perspective, we often come up with a cost neutral or cost beneficial solution, even though there's a substantial investment or a staged investment that needs to be made. So again, the sort of slight fear factor, I think, of, gosh, I know I've got to make a change, I'm not sure what it needs to be, I need to formulate a digital strategy that is all-encompassing across my business. But then breaking that down, I think our recommendation is to engage with somebody that can help you through that process. And then when you actually start to decipher some of those pieces of your business, it isn't as scary as you thought, hopefully, and it also isn't necessarily as cost prohibitive as perhaps you might think.
And finally, Guy, what do you think?
Well, I think you need to decide what are people paying you for, where do you add value, and are you doing that well? And if you're doing that well, look at what goes around it, and then why are you doing that? Why are you paying someone to sit in a London office and to type in someone's address which they've sent you electronically? Where are all these areas where you just do them because you've done them historically, and ask yourself, why do you do them? What are you paid to do? Are you doing that well? And then work around the rest to minimise it and automate it as much as possible.
Now, I know we've talked about data a lot in this as part of this discussion. What do you think the real advantages are of being able to really capture and really analyse that data? And how good are the digital tools that are helping the insurance industry to do that? Who wants to go first with that one?
Yeah, I can happily. Yeah, there's lots of tools available, and there are a lot of firms out there that are specialising in doing some pretty amazing stuff across that piece. The key difficulty, though, with it is working through legacy, and a lot of
this is actually a question that's just come in from the audience. They're saying there's many legacy companies burdened by systems, which mean they have to double or triple key in data. How is it possible to overcome that?
So there are firms, we utilise the services of some outsourced companies when we're going along to firms that do have a number of legacy systems, and they have to try and untangle the data before they can analyse it. It doesn't have to be manual. As I say, there are some very, very comprehensive solutions in the marketplace that are available to help clients with that, where you're putting robotics and machine learning into a legacy platform that then extracts and standardises that data, puts it into a format that then you can start running some of the sophisticated tools available in the market to give you some proper insight into your book. At the worst case, and Stephen's very fortunate being a startup, so hasn't got to deal with all that legacy piece. But at the worst case, you could always continue with your legacy, but start from today with a different strategy. So again, making changes whilst they may not solve all of your legacy problems, going forward in a more joined up digital manner, at least you've got a start point and a line in the sand. And we all know in this industry, you blink and 3 years goes past, and suddenly a lot of your short tail book may have expired, your legacy book will run down, and you can at least begin your journey. But the thing is to say, open the thinking and begin the journey.
I think with legacy as well is it's more of the fear of knowing where to start.
Yeah.
Someone's telling you, I've got however many thousand entries sitting there, I can't do anything about them, or I don't know where to start. And it's just the fear of just sitting down and going back and say, well, how do I do this? And actually, if you can get 100 out, you can get 100,000 out. You just find it's just knowing where to start.
Yeah, I think it's very true, actually. I think there's a big fear of technology in our industry. Certainly going back over the years, I've seen this a number of times where people have just sort of sat on their hands and not done anything about legacy systems simply because they were frightened of it. I think talking to the tech companies, so many of them do have solutions to be able to translate from one particular system to another. They've done it before. And if they, even if it's not the systems you're talking about, they understand the process of doing that and can really assist you. So I would say, don't be afraid, lift your head up, say, it's a problem, let's address it now.
So it's a bit of a misconception that once you're in a legacy situation, you're stuck in that situation.
Absolutely. Sometimes you are stuck, truly stuck. And it may be you're constrained by finance, because that's one of the big issues. All these things are great, but they need paying for. And it's, am I going to improve the efficiency of my business by doing this? And some people are in the unfortunate position of having to say, no, I can't afford to do it. I have to stick with the legacy because of that. So it is great. We can talk in principle about how these things can be done, but the practice can be different. It depends on your circumstances.
I wanted to dig into a bit more detail about specifically what our broker audience members can do with data when they collect it and know how to analyse it. What are the benefits to brokers for having a real good handle on the data that comes into them?
I think it gives them a stronger argument when they're going to their underwriters and understanding their business better. I think gone are the days where brokers could sort of blag their book going in on renewals and how it works. If you can go in with the confidence of knowing as much, if not more, about how that book's performed and why it's performed in the underwriter, it makes life a lot easier. And I think that relationship's changing anyway, with more and more burden being put on the underwriter with regulation and what they're having to deal with. If you can give them a helping hand to understand and to get there, then you have a massive advantage.
I think it goes the other way as well. It goes upwards to the underwriter, but also back down to the client, because having a good set of data across your portfolio, if you, let's say you're a engineering specialist and you've got a whole book of engineers, if you can analyse the data and do comparison, you can go back to your client base and say, hey, there's been a shift in the industry. People are starting to buy a bigger sublimit for cyber liability because of the exposures there, or terrorism, or et cetera, across product. So having that anonymous, if you like, conversation with regard to the peer group analysis that you can mine, extract data from, and then advise your clients better, gives the clients more confidence in you as a broker, and helps drive positive change throughout an industry.
Yeah, I think it's absolutely critical. I mean, it's what you want to do is create relevant solutions, and having insight into the portfolio and where it's working, where it's not working, where you're being successful, where you're not being successful, will give you a far better chance of creating more and more relevant solutions for your clients, and that's what we're here to do as brokers.
I think there's something which I'm going to say, which I have to preface by saying that I was a broker for 35 years before I switched to the dark side. I think the broker who understands their client's account and can actually broke that business more effectively as a result adds value to the insurance chain. And I think a lot of brokers out there at the moment are asking questions about how much value do I add to the insurance chain? Am I just a transactional animal? Are you taking a piece of paper from here to there, either physically or electronically? And the more brokers that be asking these questions, I think the more we'll be looking at technology to enable them to answer that question, to have greater understanding of the data and understanding of their clients' businesses, to enable them to transact better, and to answer the question that underwriters are asking: what are you bringing me? Not the risk, but what value are you bringing me in this business?
So we've had a question through about how much of the business is automated and digitised. From your perspective, what sort of the ceiling in terms of how much do you think might be able to be automated? I guess that's a really difficult question, and it depends which part of the insurance chain you're in. But is there any sort of ballpark figures?
I think you've got to cut it up in personal lines and commercial lines. So the personal line space, as we know, your household, your motor, small business insurance, certainly in the UK, looking globally, there's a relative good amount of sophistication there. When you get into the commercial space, the stuff that the London market really does, what we call the sort of 3 C's business, the capacity business, the complicated business, and the challenge, the distressed business. I think there's always going to be a place from the London market, the face-to-face negotiation, because that is highly specialised insurance, and that's what we do, that's what we're paid for. In terms of commoditising other lines, can we do the more commodity books, the smaller professional indemnities, directors and officers, terrorism, cyber, a lot of the sort of add-ons? I think the answer is yes. Can we do commercial combined, one-stop shop for commercial businesses? Yes, I think we probably can. I think the biggest opportunity we've got is the cross-selling, the automated cross-selling piece from gathering digitally at the front end, because we can profile clients as they come through the door these days. That's not out of the realms of possibility. And if you can profile a client, you can look at what products you're offering them and then automate offerings for other product sets. So I think our ability to not only enrich our client experience as they enter the process, but also from where they are, where they sit within their peer group, what we should be offering them, what breadth of coverage we should be offering them. The digital play, I think, has got, as we go through it, maybe it won't be in our career span, but as the digital market evolves, I think the experience for commercial users of insurance, consumers of insurance, will change fundamentally.
Would you like to see the results for sort of how much of the audience's businesses, how much of their businesses are automated? We've got some numbers that have come in. So 56% say 0 to 25% is automated. 21% say 25 to 50% is automated. Oh, excuse me, having a bit of a technical problem here. 8.7% say 50 to 75% is automated, and 13% say 75% plus is automated. Is that the sort of result that you would have expected?
I think it's very hard because every business is very different on what sort of class you're looking at, what sort of your customer base is. So it's very hard for me to get a feel on that poll, to be honest.
Yeah. I think, I mean, look, to answer your question, which is how much can be digitised, so I think 100% can be digitised. The question is how much of it can be zero touch while digitising. So I think they're different things, you know. So
Can you explain what those differences
so
are?
so
Because
I,
people
I
don't
think
know.
I think if you look at the end-to-end chain, you know, is there any reason why people need to walk around with paper now? The answer is no. There's no need for people to walk around with paper. Can we take the information that's been put in and can we consume it from system to system? The answer is yes, that can all be done. I think I disconnect that from the need for people to engage. And in some instances, that engagement might be relatively low because the client themselves is able to make a risk-based decision, because it might be a price point purchase, or actually the attributes to that price might genuinely be relatively limited. So for a car insurance, right the way through to, you know, very, very sophisticated sort of, you know, insurance or reinsurance components where the decision making without engagement is truly impossible. But it doesn't mean that we can't, you know, digitize that end-to-end process. The question is really about what aspects of it can be zero touch. And I think that if you come at it from that perspective, you actually then can look across your whole business and slowly evolve your digitization outcomes, you know, and have a strategy for everything you do. It may mean that in some instances you're freeing up time, whereas in other instances it's 100% automated. You know.
I would echo your point completely, Nathan, because I think it's everything can be digitized, absolutely no question. As you say, it's the touch points. You know, what can we avoid touching in that process to speed things up? No, absolutely agree.
Now, we've had a question in from the audience about how you really show proof of value of having a fully digitised distribution chain. What sort of evidence would you lay out? Is it just the business outcomes, really?
I think it gives you a chance to differentiate your business from others. I would rather be in the 8% who, you know, 100% digitised than the 50% who are not. And that, to me, is absolutely key. How can I differentiate what I do from a very busy marketplace? That, to me, is absolutely key and essential to our thinking as a business.
We were doing some research around retail brokers in the UK and asking them what their experience was at a renewal with clients. And we got a fairly consistent answer of a considerable amount of time being spent. And when asking them, what are you doing for an hour, 2 hours with that client, a lot of the answers were coming back filling in a proposal form. Okay, so of the time spent you're administrating in front of the client, gathering data, how much time are you spending discussing the architecture of the placement, peer group analysis, etc.? And it was fairly low. And I think that is quite reflective of the process in the industry. I think to Nathan's point, can we digitise everything? Yes. But to what end? You know, digitising for digitising's sake is pointless. If we can suddenly take our lives from having to do all this manual to actually injecting some real value into the chain, drive more distribution, more revenue. I think the point that you had in as a question earlier of I want to do a digital strategy, I don't know where to start, which Guy answered. And to your point, Guy, you know, look at what you're doing. If you're a specialist in equine insurance, digitise your input and enrich with data from veterinary services or anything that's pertinent to your industry to improve your offering. But I think people have just got to open their minds to the fact that it is possible. And if you are in the 0% or the lower end of the scale, just take small incremental steps to move through the process. As we said earlier, it doesn't necessarily have to be a big bang approach.
And this is also a question from the audience. Do you think the industry would ever reach a point where it could go paperless and everything could be digitised?
I think there's a difference, and I think you just made the point, didn't you? I think we can digitise everything, but can we stop interacting with it and just make it non-touch? No. There's the big business, the big commercial FTSE 100, Fortune 500 companies, they need personal service, they need advice, risk management, they need what the industry offers them. Certain sectors we can do end-to-end and have no touch. Can we gather everything digitally? Yes, 100%. But whether or not that can automatically, quote, bind, document, account, and go straight through the whole process claim, in a fully automated fashion. I think it's very dependent upon the type, class and profile of the risk that's to be insured.
Now, we've only got a couple of minutes left now, so what I'd like to do is ask all of you just to pick out a couple of key points that you think the audience should take away from the discussion today. So, Guy, can I please start with you?
Yeah, I think, first of all, if you are looking to start along this route, it doesn't have to be a big jump to start with. You can just look at what you've got, coordinate it, work out what you really want, focus what you're good on, and try and get rid of what you are, or try and automate what is not relevant to what you're adding value to. And there's lots of options out there. It doesn't have to be a big risk you're taking. There's plenty of examples out there, and it's not something new to do. It's been going on for a while now.
Nathan, what do you think?
I mean, look back to the point on strategy. I think develop a client-centric digital strategy that is affordable and will add value to your business over time. And I mean, for me, that's the critical piece, because once you start, then the rest will start to come together over time.
Stephen, what would your key takeaways be?
3 things. 1, embrace technology. 2, don't be afraid of technology. Keep your horizons as wide as possible, and don't be afraid of it. Those are 3 things.
And Lawrence, finally you.
I think there's a lot of help available, and people shouldn't be afraid to ask for it. You don't have to commit to anything, but talking to people that have got solutions that can assist you in guiding you through formulating a digital strategy, understanding how you can approach it from a modular perspective. It's all available. So if you're thinking about it, pick up the phone, ring up a firm and get them in to talk to you about it to help you.
That's great. Thank you everyone for joining us today. We've really appreciated your insights. The audience, thank you for joining us. I'm sorry we didn't get to answer all of your questions, but thank you very much for sending them in and completing the poll questions as well. This webinar is going to be available on demand, so if you want to watch it again, or if you want your colleagues to watch it, just please direct them to the Insurance Age site. Thank you.